Hi, I'm Max Schmidt. The rules for getting a mortgage have changed this summer. This spring, you could have marginal credit score, no proof of income, and no down payment and still get financing for a new home. But now, the kids are heading back to school and lenders are running scared, concerned over all the easy credit they granted over the past few years. Many lenders are refusing to make loans to anyone but the safest borrowers. According to Greg McBride, a senior financial analyst at Bankrate.com, lending standards were too easy. Now it's coming back the other direction. This could lengthen the recovery. Many real estate markets nationwide as credit score requirements have risen, as have requirements for cash down payments. For the primary home buyer with 5% down payment, a credit score of at least 680, looking for a loan under $417,000, not much has changed at all. This category of buyer is what is considered a paper category, and historically this type of mortgage has performed very well with low repossession rates nationally. Many media outlets have incorrectly added fuel to the fire by stating mortgage lending has stopped altogether, and borrowers can't get a loan without 20% down payment. This simply is not true. However, the days of obtaining a mortgage with stated income, no down payment, and low credit scores are now a story for the history books. Unfortunately, the falling real estate prices caused by these bad lending business decisions are not in the history books, but playing out every day for many American homeowners as they struggle to sell their homes and move on with their lives. Worse yet are the families who purchased a home in the last 5 years with these loose credit standards and are now finding that the low introductory interest rate that they used to qualify is now turning into a much higher interest rate and resulting in higher monthly mortgage payments, which they cannot make. For these estimated 250,000 families, the dream of home ownership has turned to a nightmare. Approximately 13% of the nation's mortgages are made with subprime mortgages. To date, over 120 mortgage companies have closed their doors due to reduced liquidity. It will take some years for the mortgage industry to reach equilibrium and return to normal. Conforming interest rates and loan programs, those backed by Fannie Mae and Freddie Mac, have not been significantly impacted by recent events. Even better, interest rates have come down from recent highs. While this is good news, the market is experiencing unprecedented volatility, and changes could come at any time. Borrowers need to act swiftly and decisively in today's climate. President Bush announced that HUD's Federal Housing Administration, FHA, will help an estimated 250,000 families avoid foreclosure by enhancing its refinancing program effective immediately. Under the new FHA Secure Plan, FHA will allow families with strong credit histories who have been making timely mortgage payments before their loans reset, but are now in default to qualify for refinancing. In addition, FHA will implement risk-based premiums that match the borrower's credit profile with the insurance premium they pay. Riskier borrowers pay more. This common-sense risk-based pricing structure will begin on January 1st, 2008. According to HUD Secretary Alfonso Jackson, many hard-working American families were able to make their mortgage payments under the initial teaser terms of the exotic loans that are now struggling to make ends meet because their rates have doubled or tripled. FHA Secure will bring stability to the housing market and give eligible families who were in good financial standing before their loans reset a chance to keep their homes. had little effect on other sectors of the economy. Pending home sales, a forward-looking indicator, shows existing home sales are likely to decline in coming months as mortgage disruptions work their way through the housing market, according to the National Association of Realtors. Lawrence Young, NAR senior economist, said abnormal factors are clouding the horizon. It's difficult to fully account for mortgage disruptions in the index, and our members are telling us some sales contracts aren't closed. These temporary problems are primarily with jumbo loans, and there are continuing issues for subprime borrowers, but there are no serious problems for the majority of buyers who qualify for conventional financing or FHA-insured loans. Some consumer concerns remain, but since mid-August, the market has been stabilizing. According to Chase Schiller Index, prices on U.S. homes have dropped a modest 3.2% since this time in 2006. This is the first sustained drop in housing prices since 1991. The National Realtor Association reports about 9 months' supply of resale homes on the market. Sales of new single-family homes were up 2.8% in July to a seasonally adjusted annual rate of 870,000 units as new home sales rebound from weak sales figures in June. The U.S. Commerce Department reported this. The July sale, the inventory of new homes for sale edged down slightly in July with a 7.5-month supply of new homes, down from 7.7 months in June. The remainder of 2007 and part of 2008 will be the best time to get a bargain in the U.S. housing market, according to Housing Predictor. The subprime loan crisis has produced the highest number of foreclosures since the U.S. savings and loan fraud crisis more than 15 years ago, providing the largest inventory of bargain homes. Housing Predictor forecasts more than 250 local housing markets in all 50 states. However, despite the subprime crisis, many markets scattered from the Pacific Northwest to the South remain with healthy sales activity, including Texas, New Mexico, Oregon, and Washington. Cuts in interest rates if the other sectors of the economy begin to weaken. On the horizon, look for a possible cut in interest rates if the other sectors of the economy begin to weaken. This will slow the rate of foreclosures somewhat, as people with mortgages will be able to obtain lower interest rates refinancing their homes. I'm Max Schmidt, and this has been the